Here we are looking at the 30-30 list, the top 30 momentum companies on the ASX and the top 30 launchpad stocks. We're also going to be looking at Mark Minervini's insights to help us sharpen our momentum trading. We'll also look at the standard things we do in the week, which is which companies or themes are lighting up the launchpad. And right now it's lithium, rare earths, and a couple of other mineral companies. We'll also discuss the importance of lighting up the launchpad. Now, this list is shared with Gary Glover on a Thursday afternoon. He gets it, he trawls through it and picks out his favourite charts, things to learn from, things to study, and the lessons from the market. It's trading opportunities. This list also goes to our members. Thank you very much, members, for supporting the channel. They get the list at the same time and they send through their requests of which charts they'd also like analysed. Sometimes they're not the ones that Gary picks out. Right? That's a fair bit to lean on to Gary, and we say thank you very much, but we say good morning. How are you, Gary?
Yeah, no, Ruckus. Good.
It was some conversations we had off air in the last week or two, reviewing your trades and looking at sort of how to get better. And then you pull out the trades kind of that you weren't as happy with, and you were sort of dissecting them in many different ways. And then just before you were talking about something that's sort of shed light on a better way and something that Minervini has said in the past that's helped you. So what is that he said and how's it helped you?
Yeah, and I was listening to a 2019 interview there, and it was basically like Minervini was discussing sort of contrarian trading, sort of contrarian investing, because most people sort of think they're contrarian, sort of. Yeah. And so he says, if you're buying stocks at lows, and if you're trying to pick bottoms, and if you're doubling up on stocks that are down, and you're ignoring losses, and you're not cutting losses, and you're buying low PE stocks or penny stocks, or you're going against the herd as far as everyone is bearish on the stock, so you think it has to go up. If that's what you're doing, you're not a contrarian. You're doing what most individual traders are doing, and that is why your returns suck. So that's why most traders' returns suck, because you're not a contrarian. If you want to be a contrarian, buy stocks only going to new high ground. Only 1% of investors actually, are contrarian and actually buying new highs. So, just kind of highlights sort of what we're doing here. I mean, it's the whole essence is, we're kind of taught, buy low and sell high, but that's not what the best traders in the world do. The best traders in the world, they buy high and they're selling higher. That's what all the greatest traders have in common. Buy strength, okay? Trading the strongest names, the leaders, that's what all the greatest traders have in common. So this is a long interview there, but I sort of like just pulled that sort of piece out. Like, if you look at it, Minervini, VCP. So he's looking to wait for that stock to have that power surge, then the price tighten up, rather VCP breaking out. David Ryan sort of looking at, cup and handles, VCPs as well. So again, strong trends, congesting up around the highs, breaking out. William O'Neill, looks at cup and handles and 52-week highs. Again, strongest names, stocks that are already showing strength, new highs or under the highs. Kalamagi, buying stocks 98, 99 percentile, the strongest 2% of the stocks on the board. That's all he's interested in trading. Strongest names. Davis, 52-week highs, basically stocks making new highs. Years ago, I wasn't even watching the screens most of the day, making incredible returns, just buying 52-week highs.
On delayed data.
Yeah. Dan Zanger, sort of like, looking at high tight flags, the sort of VCPs, bull flags, just, again, just trading those really strong names, congesting. Okay, it's just such a strong theme with the best performing traders and the best performing money managers in the past, and they're just buying the strongest names, buying strength, not bottom dwelling, not trying to really looking for the market to sort of show its hand. First show that strength, then sort of tighten up, come in there. But they're all that sort of different, slightly different nuances. But the one thing in common is always buying the strongest, always buying strength. The leaders, the stocks that are really sort of, just really powering on and sort of having that sort of power mode there. So that's where we've got to be looking. That's the essence of sort of what your report here is. We go through those names. Those are the stocks showing strength every week. So whether it's the weekly launch pad there, sort of having that burst, the biggest stocks of the burst of the week, or the stocks that are sort of, and the quarterly momentum that have shown that strength, congested and just kept building. Those stocks keep going higher there. So, I keep saying, some of the strongest guys in the States there keep posting, the leaders. So the strongest, 10, 20 stocks. And they just, each week, they're still going up, a little congestion up, a little congestion up, a little congestion up. Just keep going up. You don't want to be, go through and look at we've just had a financial year end here. Go and look at all the stocks that were the worst performing stocks for the year. Just trending down. So we're trying to buy those bottoms there, it's a dangerous strategy. It's just, that's not where the best traders play. So I know that's why we're sort of doing this. We're trying to basically sort of stick with the strongest names. That's where the biggest gains are made. That's where the safest trading is, and that's where the we've got to run with, we're running with the bulls. We're running, we're running with the river. We're not trying to sort of go counter and shoulder. Yeah. We just want to go with a, sort of, just think of it if we're basically sort of like a river flowing down the mountain there. We don't want to get sort of caught in the side streams there. We want to be running with the main, with gravity, basically. We want to be sort of going with momentum. So that's sort of what we're trying to do here. So I just thought that was a really, this interview, we just sort of broke it up. I think he's literally interviewing Minervini. Minervini's not tore shreds off him, but just put him in his box a little bit. And because up until that point, he was trading okay, but haven't really made great gains. And that interview sort of changed his life from a trading perspective, changed the way he traded moving forward, and his gains, to I think that 5 years later, he was, to the point where he was actually on the leaderboard in the US investing championship. So that's something. So
that's a huge success just to be on that leaderboard in itself.
Yeah.
But what you're, like, all of those points that you're saying there, that reminds me of like the Jesse Livermore's quote, which was he wanted to be trading with the line of least resistance, which is what you're talking about. It's going with the stream. Let's go with gravity. Let's just go with where the market's taking us.
Yeah.
And all those idioms that we know. I started stockbroking when I was 18, and what I was taught was that the first lessons were don't catch falling knives, don't catch falling pianos. Oh, okay, well, all right, okay. So we don't buy those stocks, and I learned technically what that looks like.
Yeah.
And then it was during the commodity super cycle, and there were traders who'd been around for decades, and they were saying, no, it's valued too high. No, it's just, and this is when uranium stocks were powering back in 2006, I think it was. And everyone on the desk, no one would trade them at 52-week highs. No, it's too high. That's when you got to sell. That's when you hit your profit target and you're out. And then there was one new guy who joined the desk, and he hadn't come from a trading background. And he became the best trader on the desk within about 6 months because he read William O'Neill's books. He read Jesse Livermore's books and introduced me to them. He said, so it became my job to then go and find all the stocks that were hitting 52-week highs that day and just keep sending those lists to him. And then he'd do that kind of Davis box. He also introduced me to that book. And said, I'm going to do, if it's like a coil or a compression or a box, and I'll buy the breakout. And everyone else on the desk thought he was, no, you're new to this. No, you'll learn. He didn't last on the desk very long because he just went and traded his own money. But all these guys are telling him, no, it's not how you do it. And they were still trading everyone else's money. And he's like, no, I've made enough money. It's cool. I'll go do this.
Yeah.
So, which has sort of led to all this research and what you're talking about, the list, the top 30 list. That's about the top 5% of the ASX. So every week we share that with the members. You get the list. This top 30 that we're about to look at, this is the top 5% of the ASX over the last quarter from Momentum. So with that sort of lead in, we're looking at these top 30 companies. What's showing to you in this quarterly momentum list, the 30 strongest names in the ASX?
Yeah, well, I just literally, I went through the list yesterday and sort of highlighted the ones there. So the number 4 on the list was SRL. So it's no surprise about what I've just said and what's going on in this chart here. So, I mean, if you look at this SRL here, we can see here that, look at that show of strength and the big volume on the market there. And that's a stock that's gone from 25 cents up to 70 cents there. So it's gone up 300%. Okay, so it's showing that strength. So most people think, oh, it's gone up too far. Don't want to get near it. Too late. But we know that this thing will tighten up here. So they congest. The whole thing tightens up here. And if you look at that, actually what it's actually done is actually sat on top of that previous high. So the whole thing has congested, tightened up, and then started to come through here. And you can see that's big volume there. And then it dries up here. You can see the volume dry up. Again, just the whole price sort of congesting, and it starts to sort of come out. And it pops out about, and it makes a little VCP. Yeah, congests again, no selling going on in here, pops up again. That's what we're looking for. We're looking, all the greatest traders, they're looking for that show of strength, looking for the price to congest and tighten up, and then go with the flow. And then we don't know how far this is going to take us there. So, they trade some out into heat, and then they try and hold some of the balance until we break a moving average there. So it's just, that's basically what all the top traders are doing, some sort of variation of that, but very similar to that. So number 5 here, AR9, it's had a nice jump here. Probably just sort of, for me now, it's a watch. We're going to wait for the consolidation to see how it goes here. Interesting here, if we look at most of those military stocks there, Chris, only one so far has broken the 10-day moving average there. So look how strong those stocks are. So, we've sort of come out of the 52-week high here. After breaking the 52-week high, literally congests sideways, holds the 10, and it hasn't broken the 10-day moving average since then. So since 52-week high here, 54 cents or something like 55 cents, it's now gone up 300%. And it hasn't even broken the 10-day moving average here, which is incredibly strong. So again, you're looking for that show of strength, congestion there, breaking your new highs, trading some out into strength, letting the rest ride along these MAs. So far, this still hasn't broken the 10-day moving average. So it's pretty strong. That's a really, really, good move here. So that, to me, the 10 days is the obvious sort of level there. Drone Shield there did sort of test the 10, but sort of kind of you can kind of argue it sort of held there. A lot of momentum traders maybe will look at end of day. I personally probably that might have stopped me out personally. I do look at but again, I do try and mix some of my stops between maybe the 10 and 20, depending on where it is and how late here. So you might have got knocked out of some of it, and then hopefully held the other half there.
The Gilmorales, Chris Karcher, pocket pivot, when the trailer got stopped, they'd still be long on that. They wouldn't have been stopped out on that breach. So if momentum traders are using that kind of end of day trailing stop, they'll still be holding.
Yeah, a lot of them will actually will hold the intraday sort of moves. They'll basically wait for the end of day there. So it does mean you might give up some gains and stuff there. So, but again, it depends how you're trading. And the reality is, Chris, if you've bought this sort of, like here's EOS here. So this has had the VCP. So the whole thing's tightened up in here, had it, consolidated here, comes out of that B wave there. This is literally what, that 5 weeks ago, I think we were on air actually the day that actually this B wave broke here. That's gone from sort of 130 here, maybe 133 or something on the break there, up to $3 there. So it's up about 250% here. So look, you traded some out into heat here, and let the rest ride here, then you've got a little bit of leeway in your trades as well. So if you're up 200%, and you've already taken some off the table there, and you've got nothing to, you just backstopped your, say back, get your stop at say 100% here or something, there's not a lot to lose and stuff on that sort of trade there. So it does take the pressure off your trading when it's gone so well. But me personally there, this one did break the 10. So that would have had me out there. I personally do try and give myself a few cents grace on the 10 if it's vertical like this. Or otherwise, I might have some at the 10, some at the 20 here. But yeah, again, that's what the professionals are doing. They're looking at these moving averages there, using those as their sort of guides here. But we know that the strongest stocks, sort of Kalamagi sort of trades there, that's sort of the 98, 99 percentile stocks there. They generally hug the 10 and don't break the 10. So he is the 10-day moving average to exit the closes below the 10. He's normally out. So it would have been out of EOS. But if he was in ELS or drone shoot, it would still be in there because they haven't closed by the 10 yet. So this is anyone there that's had a move out. That's the only interesting thing on the chart here is that you have had there was some heavier down days in here, and this is what we call like an overbalance. So you can see how the corrections are small all the way here. This ends up being the biggest correction of the move. So when you do get what I've referred to as overbalance, you can, one or two things that occurs after overbalance, so you can go up and make a lower high. Sometimes you can actually make a margin new high. So I still think you've got some risk here, just because that has overbalanced there. But yeah, maybe this goes sideways, consolidates here as well. But it's interesting those sort of stocks here. Some good lessons there. I mean, I go back and study those trades out. So the one thing I have done in the last week, Chris, is made a note of the best performance the last 6 months, and I went through. I made a list. I just grabbed the top 30, and I just went through them and looked at those in detail. Sort of looked at some trend lines, looked at some volume, looked at the patterns there, the setups. Just try to sort of learn what occurred in those stocks, what to look for. A few of them sort of just really took off without too much of a setup, but I'd say 85% of them did a normal, cup and handle, did a normal VCP, did the normal patterns that we normally see on those strongest known. So, it's just really important there. NTM was another one that's been on the list for a long time here.
Yeah.
So again, that's vertical. That has just broken the 10 here last week. So did break below here. So again, it has pulled back, broken the 10. So that would have had me personally out. But it has snapped back again. So it's gone to a margin new high. And so you had seen a bit of volume here, a bit of selling here. So this is something which does happen. I know, can be a bit of a topping sort of setup here once they sort of, so again, you look at all those corrections, pretty small, pretty small, pretty small, pretty small. The biggest correction of the moves. That's one thing sort of Bill McLaren used to talk about was overbalance of the trend when you sort of start to see, because normally the greatest volatility comes in one or two places, comes in at the lows or comes in at the highs. So normally when you're sort of trending there, you're not going to sort of see that volatility there. So even Kalamagi talks about, tight is the winners, loose is the losers, So once it starts getting loose, that's when the risk is a bit high there. So when you start sort of seeing these corrections, that's for when you definitely got to sort of tighten up here. But normally the momentum traders there, they'll trade some into these, this breaking out of these couple of handles. They might trade a little, might trade a quarter up into maybe 2 or 3 times their risk. They'll let some ride to maybe 5 or 8 times, or they'll just run the moving average on the balance on that and stop out once the moving average it gets broken there. So they might run half with the 5, so half with the 10, and then maybe half with the 20. So they may even still be in, but they might have cut half here, and maybe they've still got the other half on here or something. So
just before you leave that chart, actually, Gary, if you just look at April where you've got that cluster of green bars and it breaks over the 50-day moving average, you just highlight that section there. So this is something, there's a video, that section right there. So that's where MTM lit up the launch pad. And we did a video, the top 6 rare earth element companies on ASX this week. And it was interesting going back through because this is the top performer. And in that period there, That's where it lit up the launch pad. And there were 4 consecutive days where it was in the launch pad. And then not long after that, about 2 or 3 days after that, it's kind of where it topped out 24 cents and then had its little pullback. That's where it became a momentum leader. And it was on the top 30 list for about 5-6 days. And then it drifted off as that volume dropped off into early May. Then it came back on the launch pad and then it broke out. And then it's been on the momentum list. Well, it's still there. We're talking about it now.
Yeah.
So when we get to the launchpad side of things, this is a good example of what happens to those launchpad. If they light up the launchpad and they're strong with their theme and all the things that you'll talk about lithium and so on, that's where you're highlighted right there. That's where it lit up the launchpad, and that's what we're looking for. And then, as you've said, the great trade is, Minervini was talking about that explosive movement, and then it sort of has that coil and compression, Kalinagi and so on. So, to digress on this leading momentum chart, it's a perfect example of how to use the launchpad to then find those leaders and all the type of trading you're talking about.
Yeah, look, it's a little small here, Chris, but I mean, it's literally gone from sort of, 8 cents here up to, 20, 29 there. So you've gone up sort of 400, literally gone up 400% on pretty good solid volume there. And then you go through a bit of a contraction there. And then the 2 things you sort of see here, you obviously see a bit of a breakout there. You end up breaking the first lower high there. That's like a B wave break for me. But then you see throughout this period, you see some pretty good volume. So this should be, even if you miss the sort of the B wave break here, breaking the lower high there, you still notice that this is showing relative strength at the time. So that's a big move out of that way. And then the whole thing sort of congestion. You can see the volume tightens up. And one thing we noticed there, Chris, is it's like all the greats, if you go back and look at some of those old technicians, they're all using the 10, 20, and 50s, EMAs as well. So they're using these same tools. So you can see here, this comes back here and just hugs the 20, then pops here, comes back, sits on the 20 again. And each time that we got volume drives here. So we've got big volume driving it up, and then the whole thing contracts, and big volume, and the whole thing contracts, and it holds those moving averages. It's I don't know. It's yeah. I think maybe we're overcomplicating this market too much here. It's just now just sort of just got to go and try and learn. Don't try and recreate the wheel. Someone's already unlocked this, and if all the greats have got a very similar, theme to trading, use similar tools, looking for sort of strongest names there. Just who are we to argue with those guys there? So, but yeah, it's just anything here. I mean, I've been doing this for a long time here, and it's just sort of like, you feel like you're learning, but yeah, it feels like the penny sort of drops every quarter on something new that you've read hundreds of times, and all of a sudden you're sort of seeing it. So, it's just really sort of, pays to be sort of, just avoiding the bottom dwellers, avoiding trying to pick lows, just, be patiently, wait for these sort of, wait for these stocks to wait for these stocks to sort of, show the hand, show that strength, and then wait for that sort of congestion there and then come out there. It's just, and that lends itself to sort of Minervini sort of comments about being in the market the shortest amount of time, as well. You're only going to be in there when the market's really, kind of humming. PA, probably not my sort of favorite. It's pretty volatile here, been pretty loose here lately. Did have a bit of a B wave break in here and a bit of volume there. So to me, it's just probably a bit of a watch here. Has been a stock which has been pretty negative and a bit loose, to be honest, there too. Look at that sort of, but some volume going on here. So, don't rule it out there. I'm just because it's probably, for me, I've traded a few times there without sort of great success here. So it's some probably a negative filters on here, but and there's a lot of overhead as well. So that's sort of, it's done a few raises as well. So that can be negative there, but got to put our filters aside here and just look what price action is telling us. So we're starting to see a few little pops there, bit of volume coming in here. So definitely on the watch list there. What am I looking at here? Up A11. Good start. Yep, got there eventually. But
Not when you see it.
yeah. Here's another strong name here. Just been, pretty robust there. It's been, I know sort of McLaren used to talk about impulsive and corrective. Impulsive and corrective. And what I mean by corrective is going sideways. So going up freely, going sideways,
Burning time, not burning the price.
Yeah,
That way.
yeah, and that's right. So you can either get a correction in price or you get a correction in time. And these are all corrections in time here. They're just going sideways, So what we want to see is actually a correction in time, not a price correction. That's probably the only real price correction there. It's come back to the 50. But then it starts getting a lot tighter here. We're getting more sideways orientated there. So again, just moving freely, showing that strength, struggling to go down is what you want to see the stocks. If you're long software, we see sort of stocks run here, and then we see a little bit of weakness, and we do tend to sort of, it doesn't look so good, I'm out. And then the thing goes sideways for 2 weeks and then goes again. So, have your rules there, whether you're looking at the 20 or maybe you're looking at swing lows or moving averages. But yeah, you just got to stick. I'm trying to be more patient with some of my longs here. If they've shown that early strength, sometimes they can show that early strength and then they just they're more of a congestive sort of build there. So, I know Next DC for me personally is sort of one that sort of just then had that, come out of the gates hard, did a 0, 1, 2, 3, come out hard and then sort of congested there. But then it's really gone sort of, this is a look at overlapping sideways there. It's still gone sideways. So I have sort of added some back in there and it's really gone sideways for about the first 5 days I had it. But then it's starting to build here. It's still not really that far in front here, but still holding the moving average there. Still being pretty strong here. Not giving too much up, not too much to the selling here. So sometimes you've just got to hold those sort of stronger names. They will sort of build there. So that don't hold just sort of rip, like the military stocks have sort of recently. OSM was interviewing there. Got another VCP potentially setting up here at the moment, Chris, as well. So those look a little extended, but getting a little looser here. So that's probably the one negative. You'd like to sort of see them run up and then maybe tighten up like that, or tighten up like this. But still, the volume, the one thing we didn't see here, I think I mentioned this a couple of weeks ago, that run up was pretty strong. Look at that pullback there. No, the sellers haven't, the sellers aren't present here. They haven't really got in to sell this off. So we've jumped up again and the buyers have come in here. Again, we've had a couple of days down here and still no selling. So up yesterday, down today. Look at the volume bar yesterday, big. Today, no selling as well. So I know it looks extended here, but still not seeing any signs of selling here in this one. So nothing wrong with that as far as see. You're talking about we were talking earlier about some of the lithium names that were sort of showing through on the launch pad, and a couple of them have obviously moved in the previous week as well. So some of them are already onto the quarterly momentum there. So I think CXO is one of those, and BNZ is another 30 on the list, which has been pretty strong for a while. Again, that's just a stock that's showed relative strength the whole time here. They'd really gone sideways in here. I mean, this again, it's just been strong all year. Have a bit of a pullback there and it draws, the whole thing just sort of congests under high and then hops here. So this is often what does happen here. Sometimes with those sort of stronger names, is you will get the pop out, the break to 52-week high, and then it can give a little bit of a throwback. So I reckon this probably occurs in 50% at least of the 52-week breakout. So I know Larry Hite, sort of his 52-week strategy is, it was sort of we don't buy the breakout there, but with a 5% sort of stop, or maybe use a moving average sort of but yeah, you will get throwbacks in there, but you can sort of come back in, if you do get thrown out here, you can sort of come back in. So, this sort of did have a little congestion there, then it popped out again and it's come back and then gone through. So that is the hard part I find with the 52-week highs, is that half of them will just break and go. and the other half will have a little bit of volatility, try and shake you out of it. So you do need a little bit of room there. So sometimes then, but obviously some of them can go to 50-week highs and fail and turn down. So you've got to guard your capital as well. So, but yeah, it's that's probably one of the hardest strategies. That's Minervini says that's the 1%ers. That's where the greatest traders are sort of often playing, and these sort of strongest names there. So that's predominantly a list. There's probably a few more in there, but
Well, there's only one on the request list that hasn't been discussed, and it is lower market caps, it is smaller share price, but it does fit into that defense theme. VR1, so they're just talking about moving from one of their customers, the top 10 defense consumer contractor, now up to $10 million cumulative revenue, when they got 21 million booked in for the next 4 financial years over that period. So they fit into that space. Look, we know it's low market cap and lower value, but how do you interpret that kind of move?
yeah, that's probably the more interesting chart. I mean, the daily doesn't really looks pretty loose, pretty volatile there. It's pretty, big dips there. The weekly chart's a lot more interesting there because, look at that volume. So, I mean, that's been in decline for a long time. It obviously, shifts its sort of, what it's doing here. And all of a sudden get a lot more interest there. It does have a pretty deep pullback. That's the only negative, Chris, is that correction is quite deep. So that's showing that strength, big volume. Or maybe the overhead here keeps the lid on that. But then the correction there, when you do see that a lot of that overhead, that's the thing I've noticed there, is that when they do pull back, they tend to get beaten up a lot harder if there's a lot of overhead here. So, but that volume, that's pretty good volume. So
Hefty, yeah.
Yeah, so that's appealing because that can drive it on there. So that's just as big volume here. That's just as robust there. So sometimes you can actually have the next that wave 3 can be on lighter volume than the first wave, but still larger than normal. But that's just as large, if not larger than the first drive. So that's really encouraging. So yeah, it could be quite positive for that one.
Nice. That's an insight I wasn't expecting you to say for the low cap side, but the volume's productive.
Yeah, there was another stock there yesterday. Actually, I did see as well, which is obviously everyone's getting aligned with military and specialist metals, and trying to put themselves in that basket. So it's like if you can align with military metals and AI, it might give your shareholder a boost. So,
Well, yeah, they're aligned with defense contractors and AI, so they're doing all right in that space. VR1.
Yeah.
So this time we move to as you said, sort of the ones that have had that weekly push, which make it to the launch pad. In times past, you've noticed property stocks, which we kind of were ho-hum about, and then just watch them come on a tear. We've seen uranium stocks light it up, lithium stocks previously, and the gold stocks all sort of light up the launch pad and show to us like glaringly obvious a large number that are in the list. And pay attention here.
Yeah.
Is there anything that's standing out to you now? Maybe not to that full extent, but are there any sort of themes that are showing an inkling in the launch pad?
Only we discussed there, obviously that the lithium sort of rare earth sort of site was the obvious sort of part there, and we're seeing we saw lithium stocks in the last couple of days had some pretty big moves. So it is interesting sort of sector there, because I've seen a few macro guys in the last week here talk about that there's been a bit of a correlation there with gold easing off and lithium being robust as well. And the last time, talking about the last times that lithium moved there, that there was a bit of a swing out of gold into lithium. So we kind of have sort of seen that the gold sort of stocks have all eased off here in the last month, and the lithium stocks have all improved here in the last month. So just a few macro guys sort of indicating that's often something which has happened in the past, which I thought was pretty interesting. But if you look at some of those names there, look, we're seeing some good volume there. So that's the sort of smaller name, the PMT there, but we've still got a pretty strong downtrend. So we've still got a lot of overhead resistance there. I think PLS, I thought this is kind of interesting as well. I mean, again, you got a really strong downtrend here, but last thing on the chart is We do see this pullback here, second pullback, third pullback there. So there's our VCP. It's sort of basically first pullback, second gets narrower, third there. So in terms of Minervini, he likes to sort of see them. The ideal would be sort of, would be to half and half. So that's $1.50, 25 cents, so that's what he's looking for. But the only thing he probably would like to sort of see is probably like to see this burst out above the 50 and then contract back to the 50 and then go. So this is a little different here because that really, if you look at that whole through the period there, that's just lower high, lower high, lower high. So even though it is a VCP, and there is a bit of, there's a bit of volume signature coming in here suggesting some accumulation take place. That was good volume too off that here. It still is sort of coming off. Again, we've got a lot of overhead resistance there, so that's going to be a bit of resistance, I think. But we got some good early signs there. Just the thing you got to note here with, I think with these lithium, I think if the macro guys are right here about a shift, which I do think they are right, we're starting to see lithium futures improve. We're starting to see some lithium stocks improve there, but it can take a while. That's the thing here, particularly when you've sort of got such a nasty downtrend and you have a lot of losers there that have been caught here. So any sort of decent rally there, it's going to attract a little bit of selling for sure. There's going to be some selling sort of coming here. So, but that's a nice little VCP out of the move there. PLS was interesting there. I mean, Liontown, I think you and I were talking about, Liontown and CXO were probably the two strongest lithium charts there. So the one thing about I did see with Liontown was that we do have a 0, 1, 2, 3 setup here. So that's sort of something I do look for, is that, because that's sort of those 3 high lows is when you sort of start to get a bit of a basing pattern sort of forming here. So this is one of the stronger names, Liontown, and it does already have a base there. And look at that. Again, that's the first sign here of strength. So to me, this, of all the lithium stocks here, this is the one that jumped out to me, just because that had a chunky volume and it had some backbone to the rally. So first sign of strength for that stock here. And again, we've broken a twin high as well. So that's the first things we must see before we enter there. But that's a correction which has come out pretty deep. So that's a little negative, but then the whole thing does start to tighten up, which is much better, and then starting to build here. So some positive signs again, but again, Rome's not, don't expect this to take off here and go nuts here straight away. I think it will need a bit more time here. The thing I find interesting is probably IGO. Again, that's at a nice rally out of the low. So it did show some strength out of that low, and then it's pulled back here, and then it's rallied back up to the high again. Pull back here, not quite as deep. So hasn't done the PLS where we've sort of gone half, but it has sort of tightened up here. So it is possibly setting up for VCP. So there's some good volume on that rally for its first leg. Bit heavy on the first leg down, which is a bit of a negative, but we saw the good bounce here. Probably a bit less volume on the secondary sell. What we want to see here is that what would be ideal. This sort of goes maybe slightly higher here, then goes through a little congestion out and the volume dries up. So we want to sort of see, VCP. Not another VCP, but seeing the volume, the sellers disappear. So, because this is, there's a lot of losers. I mean, you look at all these charts here, the overhead is pretty strong. That's a lot of overhead. That's, for the last 2 years, anyone who's bought the stock is underwater. So that means every time it rallies, they're going to want to try and lighten off, try and sell, minimize the damage, or so that's the negative for them. So that's why it's going to take a little longer. I think it's going to take a little while to repair here. I remember sort of ResMed, when I put that load went in place there, it ended up taking about 3 or 4 months to build a base, build 3 or 4 higher lows, and it had a run, and it sort of come back. It just took a while to build here. So I think the signs are positive here for these lithium names there, but I think it might take a little while to build.
Before you change that chart, actually, I've got 2 questions on it. One, is that a 0, 1, 2, 3 for IGO as well? And then I was going to ask you about mineral resources, which is probably where you're going next.
Yeah, exactly. Yeah. So you do have the yeah, it's not really the ideal 0-1. So you want to sort of see more symmetrical there, but the VCP might be the perfect 0-1-2-3 if it comes back, because that's sort of probably the deeper one. First, maybe this is this rather than 0-1-2-3. Well, you could argue that could be, but I like to sort of see them a lot more symmetrical. So this might be the 0-1-2. We get a third in here higher, but we get a nice profile here. So we still might be 2 to 3 weeks away from the.
Which might actually be long enough for it to get back to the 200-day moving average.
Yeah.
It's close.
But it's interesting to see MIGs because Menzies offers Mineral Resources is very similar. So it's sort of similar to IGO. So it's had an okay rally, had a low, has broken a swing high. So that's the first plus. Breaking a swing high is pretty important. Pulls back pretty deep. That's a little negative, but then rallies again just under the high, pulls back again, and then holds again. So we are seeing, good volume print. So the volume on this rally was pretty steady, and the volume is pretty decent as well. And look, the one thing we do know, Chris, is that if you are weak coming into June 30, you tend to stay weak. And then you can't, because it's sort of like that's everyone looks in the portfolio and go, okay, which ones are we down? And the most, sort of sell those in the year, so the tax selling. So it does tend to keep the stocks that are struggling here in place, or keep them weak until June 30 here. So, when's June 30 here, sort of?
Just there, you had your cursor on us. Yeah, that's it.
Yeah. So, funny enough, since June 30 here, we've sort of drifted higher now because obviously the tax selling has sort of stopped it. Anyway, really wanted to sell it, lock that gain in. It's probably done it by now. So now it sort of starts to drift high here. So look, it'd be nice if this sort of just pulled up under the high here. And again, just congest here. That there has been a bit of selling, but not too much. A few larger bars in there, but eventually we want to see this pull back here and the volume just drop it. We want to see the selling. Selling's all done here. So pretty interesting. I mean, sometimes you got to go back and look at, there's been years where I remember Telstra was off 30-40% one year, and the next year it was up 30%. So they sort of what they call dogs of the Dow. They can have reasonable turnarounds there. So, I put Mineral Resources and PLS as probably, I made my I wrote down my top 10, but I think might turn around. Definitely two of those were in there. So that's probably the interesting thing on the chart there. I thought AAI was pretty interesting as well. This was sort of in that Alcoa. And again, it's sort of, it shown some strength out of the low here. Has sort of broken a little B-way there, but it's pretty gappy. It's pretty hard to trade this one here, but pull back. I like the fact that it's sort of gone back to the high here and then just sort of held, and then popped down. I thought this was a bit of a good signal day here, even though it did sort of have a throwback there. It is one that I actually did buy a little parcel off, because I thought, again, they sort of generally a lot of the metals there, we're seeing copper, aluminium, sort of iron ore, some of those
Zirconium.
Yeah, so starting to see recovery in some of those metals there. So, I think there was some good setups there. So this one's a little gappy. I didn't go too hard there just because it is too gappy to get too aggressive on for me. So, did throw back the first day, but look how volatile the next day was. And then the whole thing's tightened up and moved on. So still looks pretty good overall. And the thing about these metals is, when they do run, they can really move. So, let's go to, maybe trade some into strength a little bit higher, maybe trade some, just let the moving average, keep me in or kick me out. So, we just got to follow through there. Thought SMR was pretty interesting there because most of the, if you look at most of the coal stocks again, energy, they've all been pretty robust. So Yancoal was one that I traded here. Probably got out of this a little early. Did notice this come back and come back and hug the 20-day, that couple of touches there. Did think about, putting piece on back again, but there's just, I'm flying a lot of signals out there, right? So you can't trade them all, but thought this was pretty solid there. Had a rip, had that show of strength, come back to the 20 and then we're back up again. But the sector's pretty robust there. So that SMR has been lagging the whole time, but if we just waited see how this hadn't broken a swing high here until yesterday. So basically 194 was the last, so that's literally, we just waited for the B wave break here. You wouldn't have bought it at all until yesterday. So I did try to buy this a couple of times in here. I might try to buy this one of these little demands.
Like a sheet or something.
Yeah, but yeah, there was a little break in here somewhere, but yeah, I didn't go too hard. Thankfully, got knocked out. But I have waited for this move here. So I've been stalking this for a while. So I do have a position on this one, and it is can be a little loose. It does trade a little funny some days, but yeah, it's the thing I like about there, if you look at the weekly setup there, is that's had that little bit of it is a volume print is pretty heavy as well. Then it's sort of gone sideways there. And the volume has sort of dried up through here and just started to come in again. So yeah, it does look okay there, but also probably would have been better off just trading Yancoal a little harder. That's been definitely the stronger name there. That's the difference, I guess, as the pros there. They trade the strongest names a bit more as well. So yeah, that was definitely showing sort of greater strength at the time, which is sort of why I think they're having a good move.
I'll share an insight that I found fascinating from a data perspective. You're talking about 2 coal stocks here. And if anyone wants to be a contrarian trader like you were talking about before and actually be contrarian, when the market was humming in the COVID years and there were breakouts, we had all the lithium stocks, all the battery minerals were roaring. And then they rolled off for a little while and coal actually kicked into gear and actually ran really, really hard. And what I found fascinating was that there was a lot less chatter for that thematic, even though it had stronger returns in some of the battery minerals and specifically the ASX listed stocks. I know when we looked at it, we put videos out there. We get 10 times the views on lithium for the third time round when it was rallying. But when coal was shooting the lights out and getting better performances, it was getting a fraction of the views, and you didn't see that same sort of retail trader uptake with Twitter or X and all that kind of feed. It was just a fraction. But if you're going to make money, like, I don't really care what the theme is. If it's going to make money, I'll trade it.
Yeah.
And it's just funny, but coal is just one of those things that even though it can shoot the lights out, the average trader doesn't trade it for some reason. And if you're talking about contrarians, well, there you are. You're trading contrarian top right in coal stocks. So.
Yeah. Yeah, it's funny, isn't it? Yeah, I don't know. I guess it's maybe people think sort of coal's dirty,
Yeah.
That
the money looks the same in my bank account, so I don't mind.
They don't worry about all the dangerous chemicals that it takes to leach out all the rare earths.
Oh no, don't worry about them. That's Olivia's problem. That's not a. Yeah.
But
we digress.
The other one, I guess, the other one that's had a bit of a VCP is some of the the larger materials as well. So I noticed FMG's had that pullback there, second pullback and then tighten up again. So there is a bit of a VCP in here. Did have a little B wave break in here. Again, the volume's not outstanding, but it is sort of positive there, and it looks probably a little surprising to sort of see why, where the market is and see where BHP and Rio Fortescue are sort of trading. But yeah, I thought that was interesting. I didn't sort of trade those because I am trying to sort of stick with the stronger names there. That's that was still under the 50 here, breaking the B wave. So I just prefer to sort of try and be above the 50-day there. But some of those setups or anything, they just look like they can move there. And the other one that I thought was interesting there, Chris, was HLO.
Yeah, it's a former leader. That one did roar in its time.
Yeah. So this is sort of like, that volume print. There's some big volume taking place here. So Tim did come down and make a false break. So retested the low, big chunky volume down here. So it's definitely one to keep an eye on here. There's talk of, I think, Hello World Travel there has taken up a bit of a stake in that WJL as well, which was on the leader, which we did have that strength out of the low, has gone sideways sort of since. So there's some sort of talk about coming in there, but yeah, just interesting that this has sort of had a bit of a run here. But I guess all those those travel stocks there have sort of all a bit underwater, probably because of all the war stocks are doing well. So yes, there's so yeah, just some of the for less, maybe potentially less travel going on at the moment, but thought that was interesting. The other ones that I sort of saw, Chris, well, one that did catch my eye here was BIO, and if you look at the weekly, this was probably more interesting. Is that see how we've had this sort of this correction there, next correction, third correction, fourth there. So each one's getting smaller and smaller, and then it did break here. So it's funny. I actually did stalk this trade here because I noticed that Bio had like it's had something like 16 quarters of consecutive growth, and the last quarter was up like 40% year on year. So it's growing pretty quickly. So it does have a big PE, which is can be a bit scary there, but we know that that the big PEs don't seem to matter with the strongest name so much. It's not a good reliable indicator. So and it has had that big run already, so it's sort of come back half of that. So it's really come back 85 cents back to 40. So it's had that 50% correction, which we know a lot of leading names do come back. So that's actually not a bad sign, but it's not in the 70, 80% club. It's in the 50% club. So yeah, that's pretty interesting there. So it's had a nice pop here. So,
And what about sitting on the highs back from 2024? How does that go into your ratings?
Yeah. No, good pickup. Yeah. So that's great. So that's just another key support zone as well. So that's why you want to see that. They often come back to where the last drive started, or they'll come back and sit on top of the previous high. So yeah, so it's a really good setup here. So yeah, I actually did trade this one. I sort of watched this for a while. I sort of read it.
Under 50 cents, Gary. Under 50 cents.
I bought it. I did buy it under 50 cents, only just. Yeah. I think it was. I bought them like
40 or something.
Yeah, it might have been 49. Might have been.
Oh, okay. Right, that bit. Okay.
Yeah, it was very, very hard. It was actually hard. A bit harder to buy than I would have liked. I didn't get the biggest parcel on there. I was trying to be patient and in a stock that's breaking out in a BCP, which is probably not the thing to be patient. You probably want to get it done in a hurry, but quite a few of these I've traded recently where I haven't traded that because the liquidity was just too low. So I thought, no, I'll get it. I'll look at some of these better companies, the strong growth names here that got maybe medium type liquidity, and I'll just go a little smaller on my position size. So I thought that was pretty interesting there.
Well, as you're changing charts, I can attest to their product. I've been subscribing to them sending me some of their things. That's good quality. I like it. So,
well, thanks. So was that recommended by GP, or you just picked up yourself?
I was actually doing research. So when it came up on the momentum list the first time on the launch pad, I thought, what the hell is this company? And it would have been when it was roaring up. And I did some research. Oh, wow, that's actually just protein with probiotics and amino acids in it. So, yeah, it's I felt like doing research and that kind of thing and going together. And
well, yeah, because I think a lot of GPs recommend it as well. So that's the thing I sort of found interesting there. But if you look at the last report there, it kind of shows like the history of the company, sort of like, and so it's just kind of remind me of like Flight Centre in the early days, where it had like 16 years of just consecutive growth each year. So its growth has just been steady, growing really quickly. So it's the sort of company you want to be looking for. Having listened to a little bit more of the William O'Neill the last week here, just talking about trying to balance those stronger names with the stronger fundamentals. So, yeah, although it does have a high PE, that was the only thing to me. It did look pretty high, but the growth numbers are phenomenal for the company. So, pretty interesting segment too. So, yeah.
Yeah. Well, I was listening to like Huberman, there's some stuff, medical stuff that you and I talk about, and Huberman was one of them. It was an interview where they're talking about the body still feels hungry until it gets enough amino acids or it's actually maxed out. And the amino acids they put in their product sort of address that. So I was thinking, okay, well, that's different to all the other protein shakes that have been around for 20, 30 years. this is their focus and this is their niche. So like a William O'Neill perspective, it's kind of it's a new take on an old product in a way, but we digress. There was only one left on the list from members' requests. But what's this? You're looking at RRL, is it?
Yeah, this is just one that I noticed had a nice VCP. So I had a really deep correction, which is probably the negative, but it did come out of the April low with a little bit of gusto. So you can argue that it actually did trade back above the 50, and then the whole thing sort of tightened up just above the 50. And then, so this one does meet my criteria, because then it's, above the 50 VCP in here, and then does come through a little B like that. And it is above the 50. So I like to see a little bit more strength in those names, even though that's a pretty nasty correction. But I think if they're holding that 50, it just tends to make a big difference to me. From what I've seen there, statistically, it just if they're above the 50, I think the odds of success are a lot higher. So I'm not sure it's the Stan Weinstein type of, but the sector type of strength sort of stats, but I feel like it definitely has a positive bias anyway if it's above the 50 there in terms of being more successful.
Definitely. And that's while you're loading up the last chart, which is NBX. That's something that we're going to be looking at very soon for members, is to give them sort of a trial version of sneak peek of something else we're doing, which is a whole list that Gary and I've worked on for some time, where I'd send him lists and he says, actually, we want to tweak it and look at it this way, or have you got this report, or have you got this analysis? And so we've finally been able to compile that into a big spreadsheet where you can actually just add filter, which is all the things Gary's asked for over the years. And one of them is whether it's over the 50-day moving average or not. And it's just, if you look at everything on the ASX, and then, like you're saying, you want the top 5% of momentum companies. Is it over the 50-day moving average? Normally, yes. And then things like, how is it looking at the moving averages? Are they actually compressing and coiling together? And all of those lists that Gary and I've talked about for some time. So we're not far from that. We'll share that with members in a bit of a trial version to get some feedback. But I completely agree. 50-day moving average just gives you a much higher probability of success. And now you've probably had enough time to look at NBX on the fly. What are your thoughts on it?
Yeah, I mean, the first thing, obviously, it is below the 50-day moving average, which is kind of negative, and it has really largely remained under the 50 for the last year, which is a bit of a negative as well. So the only positive on the chart there is that last rally did break a swing high, and there was a bit of volume in there, but it has pulled back pretty deep, come back, so it hasn't really stayed on the top half, and it's come back pretty, it's under the 50 there. The thing you'll know about this stock here, this is why sometimes you do need to sort of have a look at the bigger picture, because that's not obvious when you're looking at the daily there. It could be interesting, could be setting up here. So then you look at the weekly and you go, Jesus, look at the amount of losers in front of this stock here. Every time this stock rallies, it's going to face, you don't realize how many people have bought, if you looked at, looked at the volume, Chris, from this week here. So there's 47 million, 30 million, 30 million, you got 16 million, how many, this might be a billion, it might be a billion traded here at a price above the current price. So since 22, so for the last 3.5 years, everyone who's bought this stock is a loser. So that's just not conducive to big gains. Really,
That's your headwinds. That's swimming upstream.
Rarely happens. So you're just swimming. That's why it's sort of hard for these sort of stocks to get beat up so badly to recover. That's sort of, that's why, that's why it's sort of, it's, I mean, they're just sort of, it's kind of like at the market highs, every broker's got to buy on that stock. So if you think about, sort of BHP, the top of the sort of, the last resources boom, BHP, Rio, I mean, if you listen to every broker at the time there, every analyst, you had to have the miners in your portfolio because they're all humming at the time. They were a must have. But if everyone's already got them in the portfolio. There's no one left to buy them. What's going to happen to those stocks? That's the thing. People don't understand the mechanics of that. The sort of so
that's just super funny right there. This morning I was listening to a report saying that CBA has moved from 9% of the index to 12% of the index. What you're talking about right now, right there, when BHP and Rio were peaking and there was potentially BHP was going to buy Rio, back then it was 12% of the index. It was over 12% of the index. So it peaked out where every $100 that went into the ASX 200, $12 went to BHP. And it was, so that hasn't really come back to that. And CommBank's kind of there now. So sorry to jump on those numbers. It's just funny that CommBank is there right now at 12% after sort of moving from 9 to 12 quickly. BHP did something similar.
Yeah.
So
yeah, I think you're just going to be careful of sort of, of the crowded trade as well. So on the upside, but you obviously got to be, that's why you got to be careful of buying stocks that are so deep under, the stocks that are, sometimes they look good on the charts and the daily there, but if you filter out and there's so much, so many losers in the way here, it's just going to be struggle there to get going. Oh, well, they can have a run there, can recover and stuff there. But very few really do have the big recoveries. So what's the phrase there? Sort of, the turn is something along around the turn. It's the turnaround story. But the reality is very few turn around. So the market goes looking for the turnaround story all the time.
yeah,
But statistically, very few turn around. So it's So
yeah. Well, we could always find them because it's a survivor bias. So yes, like you mentioned, I think it was McDonald's, Coca-Cola, Amazon, Adobe. They've all done it. But they're a handful. And if you look at everything else that has come in those last 20, 40, 50 years for those companies that didn't turn around, there's a much bigger story in that, but they're the names that we don't know. So anyway, they're the leaders. We've got some insights into it. Are there any other charts you want to share with us, or we can leave them for Tuesday's report?
no, just sort of, we haven't got too many, I was, clients are sort of asking about, obviously AI, robotics and stuff like this. Not too many great, companies in the Aussie market, unfortunately. We got to go looking overseas and different ETFs, which I don't really like ETFs myself. Yeah, people don't really understand the risks with those. But I have noticed that the APX there, I mean, this is one that's got a lot of overhead. So every time it does have a rally, it does get a bit beaten up pretty hard. But it has recently had a nice sort of surge out of that low. And it looked like it was going to VCP here, but it did sort of break down. But did break a little B wave the other day. Volume's okay. The whole thing's just sort of tightened up again. So I thought this looks okay here at the moment. If we can come through the top here, and maybe it can go for another run here. But again, just got to be careful that it does have a bit of overhead. So yeah, but look, the interesting thing here is there's been a lot of volume on the stock here in recent years, but look, that volume might grow because the share price has shrunk. So it's easier to buy it at the $1 than the $30. So you can buy a lot more of them for the same price. So volume should improve here as well. But you are starting to see some sort of volume down here. But yeah, I thought that looked interesting here as well. But yeah, so like that's how the drive is. I maybe going to drive here, but yeah, man, it's yeah, it's not a bad market here. I think the market's pretty, still pretty robust there. Still seeing plenty of people sort of thinking it's keep seeing the same bears, keep posting the same charts, week after week after week, saying it's extended. It's like, as Stan Weinstein sort of says, mate, don't bite the tape. If the tape's strong, it's not showing weakness there. You've just got to, it's got to go with momentum here. That's what we, as traders there, we just got to, manage the risk, trade with momentum, stick with the stronger names. Yeah, it's yeah. Follow the greats, as they say.
Follow the greats indeed, and don't stand in the front of a roaring freight train. But we've mentioned there for stay this long, well done. We are looking to give that sneak peek to the members, a bit of a better access while we tinker around and get some feedback on exactly how to deliver those lists. If you want access to that, join the members down below, and then you'll be able to see that in the coming weeks when it happens. And we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.